Hello, in this presentation we will record the entering of bills and then the payment of the bills within QuickBooks Pro 2018. If you have been working along with us, we will be continuing with the Get Great Guitars problem. If not, that's okay. You can follow along with us entering bills here and then seeing the pay bills icon and noting what is happening when 1, we enter the bills, and 2, we pay the bills, as well as some pros and cons in using this function as opposed to just writing a check. If you have the backup file up to this point, you can restore that by going to the File tab and restoring the backup file, that giving you the information up to this point in time so that we are on the same page. If you've been working through this problem, hopefully we're on the same page as well. If not, then we can follow along with what we have. We currently have the Home tab open. To open the Home tab, if it's not open, you want to go to the Company drop down and Home tab. We also have the Open Lists open over here, so we can see the open windows. To have that open, you want to go to View, Open Window List, so we can toggle back and forth through the open windows. Only open window at this time here is the Home tab. In this case, we're going to be entering the bills. These are going to be the basic year-end bills. We're paying the utilities, we're paying the phone bill, and then we're going to pay the bills. Now this is going to be the normal process when we enter just the bill. That's not going to be the bill for receiving inventory, which might go through a process where we would first have the purchase order and then have the bill related to the receipt of the merchandise. In this case, we are going to be entering the bills for items that will typically be expenses, and then we're going to pay those bills over here. Now, the pros and cons of doing this process as opposed to just writing a check are that when we have the enter bills, we can enter multiple bills at one time, and then really we can choose which bills we want to pay at the end of the month rather than waiting until we actually want to pay the bill to write to the check. If we do that, then at the point of time that we enter the bill, that's when QuickBooks will record the related expense, typically related to the bill that we are entering, or an asset if we're making a bill for an asset that we are purchasing. And that's what we really want to happen in terms of the accrual basis. We want to record the expense at the point in time we incurred the activity that we are using up. Typically that's at the point in time we receive the bill, being closer to when we actually consumed the goods and services, like the phone bill or the utilities bill, as opposed to the point in time when we pay it, which may be the following month. We want to, under an accrual basis, to be recording the expense at the same point in time that we consumed it in order to generate revenue, as opposed to the point in time that we paid it. So that's going to be one benefit that we have to the entering bills. It's also pretty useful for us to be able to enter all the bills and then pay them all at one time. And then if we're processing these in terms of checks, we can print all the checks at one time, which is nice. If we're not printing the checks, then note that we could enter the actual payments of checks here. We can use the write checks here, or we can enter these directly into the check register, which sometimes is faster if we're just entering the checks. And in that case, we would go to banking, use register, check register. That's going to be our main checking account here, and OK. And we could enter the checks here with the check number and the amount. We'll go back here and see what is being generated within the check register. Just note that if you're not actually writing the checks, sometimes using the check register is faster if you just want to enter the data in order to generate the financial statements and get what you need in terms of reporting processes. We're going to go back here in the open windows to the Home tab and start entering the bills. So we're going to enter the first bill here, entering the bills as of the end of the month of February, in the month that we are currently working in. And that is going to be, first is going to be for Verizon. Now note, if we select the drop down, we have all the vendors here. If we start printing Verizon, it should then populate, and there's Verizon. There is the vendor. Selecting tab now populates the information relevant to this vendor, meaning the information that we had in there basically last time. So we have Verizon and we have the account. Now we could also set up the system so it pulls in the last amount due within the settings. Sometimes that's useful, sometimes it's not, depending on if it's the same amount, that's going to be due all the time. In order to change the settings, you would go to Edit and go to Preferences at the bottom and look through the settings, and you can change those settings. But it's really nice that it populates, at least in this case, the account that was used last time, and therefore not requiring us to do that again. The date is going to be 2/28/21. We are working in the future. We don't have any reference number. The amount's going to be 365, and the bill date, we're gonna say the due date. We'll keep the due date is defaulting at the 3/10. We're going to keep that. Not going to change the terms. Not going to put a memo in, although it'd be nice if we were to put a memo in. We'll knock on it though. And then we're going to have the account already being selected, the default. If it were not, we would select the account. We'd have to add it. Typically, the telephone expense will be included even if we just created the QuickBooks file and used whatever the default setting. In our case, we use the default list of accounts related to a merchandising company. But typically, any default list of accounts will have a telephone expense, so we should not have to create it. And then we have the amount here. Note that we are in the expenses side here, not the items side. If we were on the items tab, we're typically looking at inventory items that we are purchasing. Everything else typically is in the expense side, even if it's not an expense, even if we're purchasing, say, an asset like supplies or like equipment, we will be putting it over into the expenses side. Note that the bill is much similar to a check. It looks really a lot like a check. Most of the data fields will be the same. The difference between the bill, of course, is that once we record this bill, it will not be reducing cash as a check would, but we'll be recording this to accounts payable. That's what a bill means. It's going into accounts payable and increasing the amount due, in this case to the specific vendor of Verizon. The other side then, increasing the expense of the telephone expense, that of course decreasing the net income for the time period it is entered as of that February 28th, 2021. Let's record that and take a look at that. Save and close. We're going to go to our major forms. We're going to go to reports, company and financial, and scrolling down to the balance sheet. Looking first, let's change the date ranges. We're going to go to the date ranges, customize report, and the dates are going to be 01/01/212, 12/31/21. So January 1st, 2021 to December 31st, 2021. This is when we will be putting the data in for this problem. Hitting OK, we then have our information, and we're looking at the payable. So down here in the payable, double-clicking on the payable, scrolling down, we have this Verizon, the name, the split, the other account is to the telephone. Double-clicking on that, we then see our bill. Clicking out of this or closing this bill, closing this window. We also note, and it could be useful to track this by vendor report, going to reports up top, scrolling down to the vendors and payables, and going to the vendor balance detail. We then see here the Verizon bill for the 365. Double clicking on that, we see the bill for the 365. Closing this back out, we can then go to the income statement, or the profit and loss as it's called in QuickBooks, and go to reports, scrolling down to company and financial to the profit and loss standard. The dates then we're going to change to 01/01/212, 12/31/21, January 1st, 2021 to December 31st, 2021. Scrolling down to the expenses area, we see the telephone expense. There's the telephone expense. Double clicking on the telephone expense, we see our bill here, 365. Double clicking on that, we see the telephone expense here. Closing this back out, closing this back out. Our net income at this time is a loss of $6,532 within this second month of business. Next, we will go back to the Home tab, and we're going to look at the next bill that we will be entering. So we're going to enter bill. And this case is going to be for the cable bill. So we're going to go to Spectrum and let's select the drop down. And we don't have Spectrum there yet. So this is going to be for our cable bill, our internet bill, and we're going to select Spectrum to enter the new vendor. And we're going to type that in, and then when we select tab, it's going to say, you don't have this vendor set up, would you like to set it up? And we're going to say yes. Rather than doing the long setup and putting the date and the phone number and whatnot, we're going to do what we need to do just to process the bill. In this case, that is the quick add. We'll set that up. The pay date is February 28th. Once again, we're not going to have the reference number. The amount will be $180. We'll leave the bill due date as the default date. And then we need the expense down here. If we look through the expenses, we can see the list of expenses, this being generated primarily from QuickBooks when we created a merchandising company. If we don't see an expense that we want to put this into, such as office expense for basically the internet bill, or telephone expense if it was grouped with the telephone expense, then possibly we want to have another line item, which we might want to call internet expense. That will allow us to track this separately. Now, it's up to the bookkeeper as to how many expense accounts we want to have. If we want to group that into utilities, if we want to put that into the telephone expense, it's all depends on whether it's relevant to our decision-making process. If we would like to look at this expense in a separate line item, then we can have a separate line item. If we have too many separate line items, then when we look at our income statement, it's a little daunting because we have all these line items with dollar amounts that may be insignificant to decision making. However, if we group everything into too large of pools of groups of expenses, then we're not really getting enough information to make the best decisions when looking at our income statement. So it's really up to the person putting the income statement together as to how many line items they want to have. We're going to select tab, and it's going to ask us to set this up. So I'm going to select tab. It's going to say, hey, we haven't set this up. Would you like to set this up? And we're going to say, yeah, set this up. And there it is. It's going to default to the expense. That's what we want. So we will continue with that and continue. And so once again, the expense, same screen, same information. We're not going to put any added description. We're not going to put the tax line in this case. We're not tracking the tax line here. And we're going to say save and close. And what will this do then? It's going to increase the amount that we owe in terms of the accounts payable account for Spectrum in specific, and increase the internet expense account, decreasing net income. Let's say save and close. Here is that process. Then we're going to go to our balance sheet. And if we take a look at the accounts payable, double clicking on that, scrolling down, we see the last check that we have, or not the check, the bill that we have put for Spectrum. Double clicking, there's the bill. Closing this back out, closing this back out, going to the vendor balance detail. We now see Spectrum here. Double clicking on that, there's our bill. Closing this, going to the profit and loss in the open windows. Double checking to see that we have the internet expense. Our new line item has appeared with the 180 in it. Zooming in on that by the double click, we see our 180. Double clicking that, we see once again our bill here. So that's going to be the effect on the financials. Let's do this one more time. That with the electric bill from Edison. We're going to go back to the home tab. We're going to go to enter bills. And we're going to say Edison. So we already have, once again, Edison there. So if we just start typing in, it should auto-populate. There it is. There's our vendor. We're going to select tab. The date is correct. We're writing them all as of that date, or putting the bills in as of that date. The amount is going to be, in this case, $648. The bill will be the default. No terms, no memo. Utilities pulled up automatically from the last time we have done that. That's great. That's what we want. That's typically going to be correct, as it does do that default. Utilities, another item that no matter what type of business we choose within QuickBooks, and QuickBooks then generates a chart of accounts for us, will typically include. some type of utilities expense, so that's not one that we will usually have to add if we select one of QuickBooks pre-prepared chart of accounts. Once we enter this, what's going to happen? Accounts payable is going to go up from the bill. Specifically, the vendor of Edison will go up. We will owe money to Edison. And the other side of it will be an increase in the utilities expense for Edison, and that will decrease net income. Let's check that out. We're going to say save and close. We'll go back to the balance sheet, and we're looking at the accounts payable once again, double clicking on accounts payable. Scrolling down, last item, Edison, double clicking on utilities. There's the bill. Closing this back out. We can then go to the vendor balance detail, which apparently I closed, and will now reopen by going to reports, going to vendor and payable and vendor balance detail. We then see the Edison here. There's the bill, $365. Double clicking on that, we see the item of $365 in the bill one more time. And we will do this again one more time in the profit and loss, the income statement type account from QuickBooks. We then go down to the utilities. That's where we put the utilities bill for Edison. Double clicking on that line item, we see the $648, double clicking on that, once again our bill. What we're going to do now is we're going to pay all these. I'm closing this out, going back to the home tab, just to show the payment process all at one time. So I'm going to select the pay bills, and we're going to pay all those at this point in time. Now, depending on the terms, we might just want to pay some of them at some points and not all of them. If we were to pay all of them, we could just have written the check. But this bill icon runs it through accounts payable. It gives us another kind of line item, another audit check within there. And it also allows us to pay all the checks at one time. So we're going to go to the pay bills here, and we're going to select those that need to be paid. So I'm going to just select the ones that we have just created. Now note the options here that we have. We have due before a certain time period. That could limit the amount of options we have, and that could be useful if we are managing a lot of payables. And if we're working in the AP department, we very likely might have a lot of payables we're trying to manage and trying to decide how best to manage our cash flow, and this due date period could help with that. We could also have different filtering options that could help us as well. Sort by, so rather than sorting by date, we might want to sort by amount and try to see and look through this report in terms of the amount due or any other type of issue or any type of column or line item that we would want to sort from. And so this field may not be blank. I'm going to say all. All right. So, and if we see that drop down, that's going to be the drop down, of course, of these that we could then sort by these header amounts here. So then we're going to, once again, I've unselected those in some way, so I'm going to reselect those. And then down here, we're going to keep all this constant. We're going to say the date is going to be of the check as of 2/28. That's when we write the check. It's going to be coming out of the checking account. And we're not going to print the checks, but if we were to print the checks, we would have to have pre-printed checks that we would then put into the printer in accordance with the proper format in terms of which way they go in the printer. Make sure you have that straight. And then you can print the checks, and once we do this, it'll print the checks for us. What we're going to do is assign the check number here, just entering the data, tracking the data within QuickBooks so that it will then populate the information into our financial statements. So I'm going to say pay selected bills. And it says, I'm going to go ahead and click let QuickBooks assign the check numbers, and it should then assign the check numbers in the next sequence that are due within the check numbers. And so it'll assign those out for the 3 checks. And we're going to say, oh, and of course that should match our physical checks that we write. So if we're writing the checks in an outside checkbook, we would want to then match up these checks to the actual checks that are being put into the checkbook to here. And say OK. That then populates. I'm going to close this. What should that have done when we pay the bills? Then of course cash is going down by those checks that we have written, and the accounts payable is going down, representing the fact that we do not owe those particular vendors anymore, and the vendor detail will go down for the particular vendors, being in this case Edison, Spectrum, and Verizon. Let's see if that is the case. Going to the balance sheet first. Taking a look first of all at the checking account, the one that's most obvious because we wrote checks. If we double click on that item, scroll down to the bottom, we see the 3 checks we have written: Edison, Spectrum, Verizon. The check numbers being assigned 1020, 1021, 1022 does look like it is in sequence with prior checks we have been writing. If we double click on any of them, we see the check being created. This screen we haven't seen before when we generated the checks because we used the pay bill icon. But when the thing we actually made, of course, was the check when we paid the bills. This is the driving form. We would have the same for Spectrum and Verizon here. We also may want to look at that in the checking account register, which we have open over here as well, because we might be used to the register. I know I am. So here's our register. And instead of just having the plain check here, we have the pay bill item, even though it is a check. If we double click on it, we see that check and close that out. That little item will just tell us that it did go through accounts payable. It did go through the pay bill item. Then we're going to go back to the balance sheet. Going to scroll down to the liability of accounts payable. This then should be the other side of this transaction. Double clicking, zooming in on that item. We see Edison, Spectrum, Verizon, other side, checking account, checks being created. Let's then look this time at Spectrum. Double clicking on Spectrum, we see the bill or the check for Spectrum here, reducing the accounts payable. Closing this, closing that. We should also see this in the vendor balance detail. Clicking the vendor balance detail, if we see Edison, here's the check that was paid for Edison, bringing the balance down to 0. If we scroll down to Spectrum, here's the check paid, bringing us down to 0. Verizon, check paid, bringing us down to 0 there as well. Note that there's no effect on the profit and loss at the point in time that the check is paid because we recorded the expense prior when entering the bill.